Hello, can you hear me?
Yes, sir. Good evening. Loud and clear.
Okay, so today our topics is about web analysis. So how we can analyze each and every web. So there are so many types of web in our market. So like this type of web we see. So in a channel movement, we see this type of web, and in a ranging market, we see this type of web. And in a trendy market we see this type of web. So for volume analysis we have to select this type of market, and we have to analyze this type of web. So in a uptrend market or in a downtrend market, in a trendy market, this web and this web. So we already know how market changes direction after a long uptrend or after a long fall down. When market change its direction, it may change its direction by creating any range like this type of, or any pattern, chart pattern here to here. And after that, when market started to going up very strongly from this bottom, from after creating this type of range, now uptrend start. So we have to select the trendy market, this type of trendy market. I already explained that when we get market create this type of trendy, strong trendy market in the left side, after creating any chart pattern or after creating any range, when market started to going up, we can expect another trendy situation, this type of trendy situation in the right side also. That's why this type of, the selection of this type of market is very important. After that, when market started to going up, so we can expect market will give us another trendy situation in the right side also. And sometimes we see like this type of sideway type situation. After sideway, market may break upper level and goes up, or market may break the this range to the downward direction, and finally it fall down and it create this type of trendy situation. So when market create this type of trendy situation, it's a strong trendy market, and it's a very very good market. So I am talking about the good market, not a news released market, news effect market, or like a ranging type situation market, or like this type of sideway type, or this type of channel movement type market. We have to always select this type of trendy market, and we have to analyze this type of market, and we can place our trade by analyzing each and every point, by volume signal point, by web analysis point, by all the by chart pattern point, by all other situation we have to analyze, and we can decide when and how we can go with the buyers, when and how we can go with the sellers. Based on signal we can place our trade when market changes direction. So today's topics is about web analysis. So in if we zoom out the market, we see this type of only one web, large web in the market, like this type of large web. Suppose it's a 6 month market, and this type of only one web. So in one web we expect three inside of this one web. If we zoom in the market, that means candle size little bit large, then we get another this type of three waves inside of this one wave. So suppose it's a 6 month market, it's now a 3 month market. Inside of is every wave. So this in this area, or in this type of market, 6 month market or 3 month market or 1 month market, we don't place or trade, because we place our trade for a short time. We don't place our trade for a day, for 24 hours, or for 3 days. No, we only place our trade only for 1 minute, 3 minute, or 5 minutes. That's why if we slowly zoom in the market, so that time we see this type of wave, and inside of this wave we can expect three wave, this type of three waves inside of one wave. So this type of three wave inside of one web. Suppose it's a it's a 15 days market, or like it's a 4 hours market, like this web. So again we zoom in the market. Now inside of this web we get this type of again three webs. Again three webs inside of one web, one impulsive web. Okay, so now think that it's a 30 minutes market, so we always or one more market, this one, and we always place our trade in this area in this market. So we have to analyze this type of sorry, what happened? Shit. What happened?
Yeah.
Shit. I think drawing has already gone. So just try to understand, when we see this type of web, inside of one web we expect three webs. Okay, so
Okay.
three webs here, also three webs inside of one web. So think that it's a 30 minutes market and we have to analyze this market. We don't place our trade for 1 month. That's why we don't have opportunity to analyze this type of web. Just we only analyze this type of web. So if we think that it's a 4 hours market, so now again zoom in the market, we can expect another three web inside of one web, like this type of web. So it's now a 1 hour market or 30 minutes market. So in this market we can place our trade. So in our market, in this type of market, we get this type of situation. It's the first wave after pullback. It's the second wave, and after pullback, okay, it's the third wave, and it's the first wave. After pullback, second wave. After pullback, it's the third wave. So now if we analyze this market and this market, two different type market, this one. So first, in first market, this one, we get the first wave is a large wave. After pullback, second wave is a short wave than this one, and third wave is more shorter than this one. So step by step, market losing its momentum, and here it's the first wave very short wave, second wave is larger than first one, and third wave is very larger than previous two waves. So it may happen to the downward direction also. In downtrend market, same thing, just downtrend market.
Okay.
Yes, first
Yeah.
this one, again first wave, this one correction, second wave larger, third wave more larger than previous two waves. This one, and opposite situation we see. Sometimes first wave larger, then after pullback short, and second third wave is very short wave. Okay, I think. So now we have to analyze two types of market, two different way. So in a first wave, when we get this type of situation in a strong trendy market, we can expect in a first wave like this type of first wave 7 to 12 candlestick in like this type of momentum type situation, minimum 7 to, it depends on, it's this amount is not a constant, 7 to 7 to 12, this amount is not constant. Why? I will explain. Because every time market may not create 7 or 12 candles, just we have to understand what is happening in the market. So if market create here a 7 candlestick here to here, it's a large wave, very large wave. So after pullback in a second wave, we can expect, if market create here 7, we can expect 5 or 6 or 4 candlestick here to here,
Okay.
because it's a large wave, then market create here a short wave. If here 5, now we can expect market may create here a 3 candlestick. After that, market may fall down if we see any level, extreme seller entry point level or any seller entry point level here. But in this case, same thing here. Here 7 to 12 candlestick. Here 5 and here 3. Same, just it's a downtrend market, it's uptrend market.
Yeah.
But if we see market is very market after a long fall down, market changes direction and market already create here a wave, it create 2 or 3 candlestick, suppose 3 candlestick here. After this pullback, market again started to going up. Now we can expect that market may create here more than 3 candlestick, like 4, it may 5 or it may 6. If 5 or 6, now we can expect market may create here a more than 6 candlestick, like 7 to 12 candlestick here. All the amounts are not constant.
Okay.
All the amounts are not constant. Just it depends on
Yes, yes.
market structure, market situation. Try to understand, because sometimes market may create only one candlestick.
Mm-hmm.
After one candlestick, market pullback. After pullback, if market create 2 candlestick, that's why we have to think that it's a short wave, it's a large wave. Now we can expect more than 2 candlestick in the last wave. Okay.
Okay.
So why?
Mm-hmm.
Because see here, if we think that it's a resistance level and it's a support level, and market create here a start from here, it create this type of fast wave here to here. After pullback, now it's a second wave here to here. In a fast wave, market already came near to this support level. If market create here a 4 candlestick, how we can expect that market again create here a 7 candlestick? Less than 4 candlestick, that means 3 candlestick market may create here. After pullback, now market may create here a 2 candlestick or only 1 candlestick. After that, market may change its direction. Okay. So
Okay.
we have to think about this market structure. Sometimes what happened, market may create here a 5 candlestick, then here a 3 candlestick, here again 2 candlestick, or market may create 5 candlestick, here a 2 candlestick, after that here 2 candlestick. So same amount of candle here and here also. After that, market may change its direction. So it depends on market structure. If resistance here, if support here, so how we can expect that market start from here and market create here a 12 candlestick? No. Market may create here a 4 or 5 candlestick. After that pullback, after market create here a slow down. Slowly it when came here, more chance that market may again change this direction and again create another situation. So I am talking about the perfect market condition, not a news time effect or news time market.
Sure.
So
Sure.
if we think that, if we see first time market create here to here a large wave, that means here to here market create a 7 or 12 candlestick here to here, and now after that market create here a 5 or 6 candlestick here to here. So now market is become slowly losing its momentum. Buyers are losing its power, losing its momentum. So when we see after this 5 candle, the resistance level not here, extreme seller entry point level is here. Although we get signal here, if we can place our trade to the upward direction for 3 minutes, only one candle market may goes up. After that market, two candle fall down and we definitely lose this trade.
Yes.
So this type of analysis, wave analysis, will help us what's happening in the market and what can we do. Okay, so although we get
Okay.
any signal candle here, if we see resistance level is very near, then we don't have opportunity. Market may create this type of situation and we may lose our trade. That's why we have to avoid. If we see market already create here to here large wave, then short wave, then more shorter wave we can expect. Even only one candlestick, after that market fall down. All the this candlestick is not a constant, just it depends on market condition, market structure. And think about this market. It's a very weak wave. First, weak wave, that means short wave, not weak, because after changing its direction, buyers definitely strong here. Market may create strong two candles. After that pullback, again market started to going up. So after 2 or 3 candlestick, when we see this wave is a large wave, and already market create 2 candlestick here or 3 candlestick here. So it's the early stage of the market. Definitely after this type of signal, we can definitely place our trade to the same direction of the trend. It will give us winning trade. If we see market create here 3 here, more than 3, after pullback, if we see our resistance level, extreme resistance level above, so we can expect market may create here more than 5 or 6 candlestick at the last wave. So definitely we can place our trade here confidently to the same direction. Okay, so when market came here, suppose market will give us winning trade. If we see market create here 3 here, more than 3, after pullback, if we see our resistance level, extreme resistance level above, so we can expect market may create here more than 5 or 6 candlestick at the last wave. So definitely we can place our trade here confidently to the same direction. Okay, so when market came here, suppose market came here or here after this type of wave, so came to a support level or came to a resistance level here, or from this downtrend market, for this downtrend market came here resistance, from a support level. In uptrend market came to a resistance level. So when market came to this resistance level, and sellers may enter, trying to enter in the market and turn the market to the downward direction. But if we see market failed here, market trying to make a range here, and finally breakout happened to the upper direction, now we can again expect more wave from here.
Okay.
Here more wave. So again 2 or 3 wave to the same direction, but not so many wave or not so large wave, because market start from here. when market came near to any resistance level, after one or two wave, market may change its direction by creating another pattern here. So that time this area act as a connective area. So this area connect this market and this market. That's why this area, this type of ranging type situation will act as a connective wave. This is called connective, not a corrective. Corrective is this one. Impulsive, this one corrective. This one connective.
Yes, I did.
Okay, so market again started to going up. So when we see market released from this area and started to going up very strongly, so after this pullback area, so in this pullback area, if we see our resistance level is above, so we can place our trade from the support level to the upward direction again. When market released from this
Okay.
area, see our resistance level is above, so we can place our trade from the support level to the upward direction again. When market released from this area, it will again
Okay.
continue the market to the upward direction. Same thing, market fall down and down. So in this case, when short wave, then we can place our trade confidently to the same direction. When again market create this short, then large, then again we can expect market create a more larger wave, a third situation. So each and every wave depends on the starting point. So first, if we see it's a short wave, then we can expect a large wave than this wave. But if we see the news time, news effect market, everything will, it will not work because market movement that time so sharp and market so much volatility we see in the market, and sometimes it create strong like this type of candlestick, this type of wicks, and like this type of candlestick, doji type candlestick, this type of wicks, this type of wicks, or this type of candlestick. So market direction is not right here right now. So that's why we don't analyze this type of market in this situation. Just we have to avoid uh, this type of market. So when the market movement is like this type of, so that time we can easily place our trade after pullback. So all this wave act as a connective wave here to here. So after sales this direction, when we see market again started to fall in down, it create a momentum and it create already 7 or 8 candlestick, or sometimes 10 candlestick. That time it's a first wave to the downward direction, it's a large wave. So then we have to immediately search where is our extreme support level. If it's a very near, we don't have opportunity to place our trade. If we see far away, then we can place our trade after all the market create here to here a very strong large wave. So that time we also can place our trade by this type of weak bullish candle. In our signal candle, we can place our trade from a resistance level to the downward direction. So now this, in a very perfect market, in a very strong trendy market, we can expect, this is our expectation, that 7 to 12 candles. So 7 to 12 candlestick market may create. So here to here, how much candlestick market may create in a corrective wave, this is another question. So when we get in this type of market, sometimes we get only one candlestick in a corrective wave. After that, market again started to going up.
Okay.
So if we see two candlestick after that market is to going up, then it's a very perfect movement of the market. When we get three candlestick, then we can also, it's okay. But if we see market creating again and again strong candlestick, and it create already more than three candlestick, immediately we have to check this area. Which type of area this one? If we see market create here a extreme sellers entry point level, strongly market goes up here, that after came back to this level, market may strongly again fall down and again came back to this support level, or came near to this support level. After that, market may create uptrend situation like low, hello, 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 and market may goes up. Like this type of movement we see. So each and every time when we get here to here one candlestick, after that market going to the upward direction, that time it's a normal market condition, and that time we can expect next wave. So if we see market creating here more than three candlestick, then it's a momentum, and after this momentum market may directly fall down also. That's why we have to analyze this
Okay.
corrective waves also.
Mm.
So if we get market strongly falling, going up or strongly falling down, or here to here short wave market create, after that we get any signal candle here. So now after this type of two or three candlestick, now we can expect market create more than three candlestick and market fall down. So all these market are very perfect market condition, not a news time or news effect market, not a bad market. Okay, so most of the time
Okay.
it will create this type of situation. So we have to analyze this type of situation, and after connective wave we expect sometimes two wave, after that market may fall down. So that's why after breakout of this area connective wave, if we get any signal, only one time we can place a trade to the upward direction, or only after came back to the support level. If we see ranging type situation here and finally breakout happen to the downward direction, we can expect very short term movement like two wave. After pullback we can place a trade only for one time, not more than this. Market may come to any buyer's entry point level and market may change its direction at any time, because seller center from here it already creates so many waves to the same direction. That's why when market came to any buyer's entry point level, market may again change its direction and goes up. Okay,
Okay.
so
Mhm.
if you have any question you can ask me based on this wave analysis.
Okay. So I would like to ask, supposing if we are like considering an uptrend, so
Yes.
when we count the candlestick, whether it is 7 or 3, so we are counting all the consecutive color of candle.
I didn't get you because of broken voice. So text me, please.
Okay.
When we count the candle in a wave, we count only the candle of some same color or candle. So when we see that market falling down, and it came to any buyer's entry point area, after came back to this buyer's entry point area, when market changes its direction, now here to here, this is our impulsive waves. We have to count
Yes.
The impulsive waves candle stick only in the uptrend market, and separately we have to count this corrective waves candlestick also. So when
Okay.
we see here to here, market create five candlestick or three candlestick. This is our impulsive waves. And here to here, this is our corrective waves. Impulsive waves candlestick we have to count separately, and corrective waves candlestick we have to count separately. We don't count here to here 10 candlestick, green color plus red color. No, only green color. When
Okay.
market
Okay.
downtrend, only red color. When market corrective waves,
Okay.
only green color candle. If more than three candle, then it's a, we have to see search which type of level this one, because it's a momentum. After fall down, market may directly goes up also. That's why we have to count separately. So when we get
Okay.
here three candle, we can expect now more than three candle here, because our extreme resistance level is here. Okay, so now I'm going to the chart, that it will be
Mm-hmm.
more clear. Okay,
Mm-hmm. Okay.
see here, if we start from here, market create one, two, three candlestick here. After this two candlestick, it's a corrective wave. So this is a signal candle. So this is a signal candle. Okay, let me add the volume. It's a signal candle, and this is a signal of volume analysis. So this is called no demand bar signal. So after this signal, if we get any resistance level, so we can place our trade confidently to the downward direction, because market says this market is now falling down, and it's already create this type of only three candlesticks. So now we can expect more than three candlesticks in the second wave. If we get any signal, suppose it's a signal, think about this candle is a inverted hammer candle, bullish inverted hammer candle. Think that, suppose it's a bullish inverted hammer candle, and volume is also high, so definitely it's our signal. And this is our resistance level. When market hit this resistance level, we can place our trade to the downward direction again, because our next round number level is here. And we
Mm-hmm.
expect, we see here three candlestick, here four candlestick. Now we can expect market may create more than four candlestick, because it's a sequence market, shorter to longer, one, two, three, four, five candlestick, only one bullish candle, sorry, only one doji candle. We can consider this one also, one, two, three, four, one, two, three, four, five candlestick market create here. So here three, four, five. So we can place our trade confidently here. Okay, so I'm
Okay.
showing you some others market condition, then it will more clear. So suppose market start from here. So now market start from here. So if I draw here a support and resistance level, then it will more clear. Okay, this one previously. Okay, okay, can we call this one an extreme support level? Buyer center, rejection,
Yes, it is.
buyer center, buyer center goes up. It's a resistance level. So this is the area. Here resistance, here support. Okay, so see here, When market start from here, 1, 2, 3, 4, 5 candlestick market create. So after that, market already create 5 candlestick, and it already close the maximum way here to here. So maximum area it covered 1, 2, 3, 4, 5 candlestick. So now here to here, can we expect that market may create here a more than 5 candlestick as a second wave?
No.
It's not possible. That's why
Yes.
we have to count this area is our large wave, and then short wave, and then short wave. Finally, market came to the buyer's entry point level. After that, market goes up. So it's trying to make a pattern here, chart pattern here, but failed. So when it failed, market came to this area, buyer's entry point area. Finally, market break this level. So now these three wave is one market area, and this one and this one another market area. So now this area is acting as a connective wave. So it connect this market and this market. So here this is a large wave, then short, here short wave, then large wave. So when market came to this round time, this is the uh, 2 p.m. I think. Okay. So this most of the time in round time, news release time, more possibility news released by this time, 2:30, 1 p.m., 3 p.m., or 3:30, more possibility news released.
Indian timing.
Yes.
Okay.
No, Indian timing, that means you see in your platform this type of round time, okay, you see this
Okay.
in the platform, not Indian timing. Just see here, okay. So when you get
Okay.
this type of situation, so we see so much volatility, so many doji candle, like this type of weak candlestick, okay. So I'm showing you
Okay.
which type of market is a very perfect market for this type of analysis. I'm showing you more examples. So news released and market condition is now very bad. So here after this sideways type market again started to falling down from here. So this is a first wave, we can call only one candlestick. After that, 1, 2, 3 candlesticks. So now this is it our signal, after signal in a downtrend
Sure.
market, volume high. So now inverse after signal, this one. So when this candle hit the 50% level of this candle, we can place our trade to the downward direction for 3 minutes, because market is falling down and it create first candle, one candle, second wave, 1, 2, 3 candle. Now we can expect more than 3 candle here, 1, 2, 3, 4 candles. So after this signal, if we get another signal here, we can again place our trade to the downward direction. If we see our extreme level is here or round number level is here. So when market started to falling down, we can expect more than 4 candlestick here. 1, 2, 3, 4, 5 candlestick market creates. So finally, market when came to this area, it's another round number level. So market trying to make a range here. So after range, market create two, then one, because it's another round number. So after this situation, market make a sideways type situation. So this area, ranging area, acting as a connective waves. It connect this three wave and this 1, 2, 3, 4 waves. So when we get already market start from here, so it already creates so many wave to the same direction. After this connective wave, we expect that market may fall down little bit. After that, market may create a sideways type situation. Okay, so
Okay.
After this type of situation, if we get any signal, we can place our trade to the downward direction based on that signal. Only for one
Okay.
time, not more than like after one candle market may strongly goes up, and that time we may
Mm-hmm.
lose our trade. Okay, so I'm showing you another
Yes.
situation. So just try to understand. Okay, okay. So see here. Okay, so it's a resistance level previously. So market start from here, two candle, one, two, three candle, one, two, three, four candles. So shorter to longer. And when market came to this resistance level, again market started to falling down. So when market started to falling down, our previous support level is this one, because market start from here,
Yes.
this two, three, then four.
Mm-hmm.
Market again started to falling down. It already create three candlestick, and there is a huge gap here to here. That's why now we can expect market may create more than three candlestick here to here, because support is here. So now market create 1, 2, 3, 4, 5, 6 candlestick. And exactly when market came here, it trying to make a ranging type situation. It may create any pattern also, and market may goes up also. But market failed. So when market failed, see here, it create a ranging type situation here, exactly at the support level. After that, it create 1, 2, 3, 4, 5, 6, 7 candlestick. So when market creates 7 candlestick, we have to search, is there any support level very near to us or not? Because market already create one wave, two wave, and after range it already cross a large area. So market may reverse from this round number level also after creating one candlestick. That's why this signal is risky for us. So here, short to longer, shorter to longer. Three candlestick, after that 1, 2, 3, 4, 5, 6 candlestick. So market create 1, 2, 3, 4, 5, 6, 7 candlestick. Now we can expect that market may sell this direction at any time. We can expect a short wave. Here short, then we can expect large, because support level is far away. This area. After failed to go up, market when again started to falling down, when we get 1, 2, 3, 4, 5, 6, 7 candlestick in a row, so then we can expect that market may change this direction at any time. So see here, always try to select this type of trendy situation, trendy market situation in the left side. Most of the time market will give you another trendy situation in the right side also. So market when changes
Yes.
direction by creating engulfing pattern, market create here a 1, 2, 3 candlestick. Sometimes it happen. So three candlestick, three candlestick. So when we see market creating three, three, now it's an equal web, equal candlestick, equal amount of candle market create. So after this type of situation, we have to search where is our resistance level. If this resistance level is here, below here, that time market may create only one candlestick. After that, market may change its direction. 3, 3, 1. After that, market fall down. Previously, we see 2, 2, 1. After that, market create range. Like this type of situation. If the resistance level here, but resistance level, extreme seller's entry point level is above here, but market now here. Now we can expect market may create more than three candlestick and goes up. 1, 2, 3, 4, 5, 6, 7, 8 candlestick market create. It's a clear down pseudo downtrend signal. We can easily place our trade here to the upward direction. Continue. So market continue. So this is the way we can analyze. So market finally, when market came to this extreme seller's entry point level, market trying to make a range here. Finally, this candle break this range. After breakout, if we get any signal candle, we can again place our trade to the same direction. Not more, not now we can't expect that market may create again 4 or 5 impulsive waves to the same direction. No, market may change this direction at any time, because market start from here. It already create so many wave to the same direction. After creating a chart pattern, market again fall down. Okay, it's a double top pattern, and neckline breakout happened within one candle. With after weakness of the buyers, sellers again entering the market. So when we get that this type of wave to the same direction, so and our resistance level is above, that time we can expect market create more candlestick than previous this type of wave. More candlestick we can expect.
Okay.
Okay, and we can
Say,
place or trade confidently to the
till
same direction.
description. Mhm.
Okay, so when
Okay.
market has started to falling down, it already create three candlestick. After that one candle again market is to falling down, so support level is here. So now we can expect market may create more candlestick here to here because support is below here. Okay, so when market create a large wave,
Mm.
then we can expect short wave, and we always try to
Okay.
select this type of trendy market in the left side. Market will give us another trendy position in the trendy situation in the right side also. Okay,
Okay.
so this is the analysis, wave analysis. We can analyze the market. It's also help us. It also giving us a sense that what will happen, what's the next movement, how much candlestick market may create. Okay, so
Yes. Yes.
try to practice on it. Okay, so this is all about today's session.
Mhm.
Now I am going to close today's session here. Thanks for joining today's session.
Okay, sir. Thank you.